Hello students, welcome to AccountWise Academy. This is Latha Venkateshwaran. In today's topic, we are going to see about the accounting of incomplete records. In accounting of incomplete records, first I am going to give you introduction of the topic. Then what is statement of affairs? Let us see about that. Calculation of profit using basic accounting equation, calculation of profit using the capital account, calculation of opening capital, sales, purchases and closing bank balance. There are two ways for maintaining accounting records. First is the double entry system and the second is the single entry system. So first let us see what is double entry system. When full set of accounting records is maintained by the owner of the business, then he will have all the information about the assets, liabilities, revenues and expenses of the business. This makes the preparation of final accounts very easy. Sometimes businesses, particularly small businesses like grocery stores, general stores or a food joint, fast food joint, okay, do not maintain full set of accounting records. What will happen then? Then it means that they have a incomplete set of records or single entry system. So accounting from incomplete set of records is a process of preparing financial statements when a business does not have a complete and systematic set of accounting records. Okay, incomplete records are also known as single entry bookkeeping. This is when a business does not maintain all the necessary detailed accounting records such as ledgers. So we maintain lot of ledgers. They may not have maintained ledgers properly like sales, purchases, returns, etc. Incomplete records means that some transactions are partially recorded. What is the meaning of partially recorded? They might have recorded only the debit and they might have forgotten to record the credit, or they may not know to give the credit for the debit and vice versa. Or they might have totally avoided or totally forgotten the transaction. Okay. Then the drawing up of the trial balance becomes very difficult. We cannot draw a trial balance when double entry system of accounts are not maintained. And final accounts, ultimately final accounts cannot be prepared also until certain amount of preparatory calculations are carried out. In this chapter, we are going to see that preparatory calculations only when incomplete set of accounting records are maintained by the business. When a list of assets and liabilities is prepared without the use of double entry records, it is known as a statement of affairs rather than a balance sheet. When we prepare balance sheet in a traditional way, that is according to the double entry system of accounting, always assets will be equal to the liabilities. But when we prepare statement of affairs, it may not be the case because we would have prepared only from the incomplete records. So we'll have a statement showing what we owe. What is this what we owe? These are liabilities, correct. liabilities and what we own. It will have only that value. These are correct assets. Very good. So these are our assets. We are going to estimate value for assets and liabilities according to the incomplete record. We are going to put the value here and here. It may not tally. So there may be difference. We have to deduct assets from liabilities. You will get one net value. That net value usually will be our capital, either our opening capital or our closing capital. Now we are going to find out profit using basic accounting equations. Okay, when the assets, liabilities and capital of the business are known and no further information is available, then the only way we can find out the profit is to compare the change in the capital over the financial period. So when the capital increases, then we make profit. When capital decreases, then loss is incurred. So it is as simple as this. Okay, when capital increases, we make profit. When capital decreases, loss is incurred. Let us assume that our closing capital is 1,40,000 and our opening capital is 1 lakh. What is our profit? Profit is 1,40,000 minus 1 lakh is equal to 40,000. So our profit is 40,000. Next scenario is, if drawings have taken place during the period, how will the formula change? The formula will become profit is equal to closing capital minus opening capital plus drawings. So let us now assume drawings as rupees 20,000. We know from the previous example that the closing capital is 1,40,000. Let us take the same example, okay? And opening capital is 1 lakh plus drawings. Drawings now is 20,000 plus 20,000. So now our profit will change to rupees 60,000. Next scenario. What if additional capital has been introduced during the period? Profit becomes closing capital minus opening capital plus drawings minus capital introduced. So now let us assume that additional capital or capital introduced as rupees 30,000. So now our profit becomes same 1,40,000 we are taking as closing capital. Opening capital is 1 lakh. Same formula plus drawings is 20,000 less now the additional capital or capital introduced is 30,000. So now our profit will become 30,000 rupees 30,000. We saw how to find out profit using the formula method. Now what we are going to do is we are going to open the capital account and find out the profit. See whether if you use the formula or whether we open the capital account, profit is going to be the same. Let us now understand how to calculate the same profit using capital account or by opening the capital account. So capital account will have a credit balance. So here by balance brought down year 1, see here January 1, that becomes our opening capital. Our opening capital was in the example was 1 lakh. So we write 1 lakh here. Okay. Then we saw the closing balance. Closing balance will be on the debit side. So this becomes our closing balance. To balance carry down. So it was 1,40,000. We write it on the debit side. Then we saw some drawings was withdrawn from the business. So what is the entry for drawings? Drawings entry is capital account debit to drawings. Amount was 20,000. So here two drawings we write as 20,000. Then some additional capital was introduced. What is the entry for additional capital? Bank account debit to capital account. It was how much? 30,000. Yes, 30,000. So here by bank, this is our additional capital and the amount is 30,000. Now on seeing the account we see debit side is more than the credit side. So we total the debit side. How much is the total of debit side? It is 1,60,000. 1,60,000. The difference is our profit. So what is the difference? Difference is 30,000. So profit is 30,000. See the formula method, we had the profit of 30,000. Now when opening the capital account also the profit is 30,000. It is the same. We can either go by the formula method or using the capital account. It is up to us. Profit will be the same. See again year 2 here January 1. This becomes our opening balance. So by balance brought down becomes 1,40,000. Okay. Now let us see another sum. The question is, on 1st April 2008, Chotu started business with an initial capital of rupees 70,000. On 1st October 2008, he introduced additional capital of rupees 40,000. On the 7th of every month, he withdrew rupees 5,000 for household expenses. On 31st March 2009, his assets and liabilities were rupees 2 lakhs and rupees 70,000 respectively. Ascertain the profit earned by Chotu during the year ended 31st March 2009. The solution is, see, he started with the initial capital of how much? 70,000. So this initial capital becomes our opening capital. And on 1st October 2008, he introduced additional capital of how much? 40,000. So additional capital is 40,000. On 7th of every month, he withdrew 5,000 for household expenses. Household expenses means personal expenses. Personal expenses means drawings. So he withdrew 5,000 every month. For 12 months it will be 60,000. So our drawings is 60,000. We have to find profit. Right? For that what is missing? The missing part is the closing capital. We know the assets are 2 lakhs and liabilities are 70,000. It does not tally. When we deduct assets minus liabilities, we get 1,30,000. So this becomes our closing capital. So closing capital is assets minus liabilities, 2 lakhs minus 70,000 is 1,30,000. So let us substitute all these values in the formula. What is the closing capital? Closing capital is 1,30,000 minus opening capital is 70,000 plus drawings is 60,000 minus capital introduced or additional capital is 40,000. So we get rupees 80,000 as our profit. Let us take the same previous problem and open the capital account and see the profit. Okay. So the same sum I have taken and we know that the opening capital is 70,000 or the capital introduced when starting the business is 70,000. Additional capital is 40,000 drawings is 60,000 and closing capital is assets minus liabilities, that is 1,30,000. So since Chotu has started his business on 1st April 2008, so he has brought in the capital first. So the entry will be bank account debit to capital account. Amount is 70,000. For the initial capital he has brought, the entry is bank account to capital. So here we have written by bank. See, on 1st April 2008, it is 70,000. Next, on 1st October 2008, he introduced additional capital of 40,000. So on 1st October 2008, same entry, bank account debit to capital account, but the amount will change to 40,000. So by bank, 40,000 amount. Next, on 7th of every month, he withdrew 5,000 for household expenses. So household expenses is personal expenses. So it is drawings. 5,000 into 12, it is 60,000. Entry is what? Entry for that is capital account debit to drawings. Amount is 60,000. So here on 31st March 2009, two drawings we have written and the amount is 60,000. And we found out the closing capital as 1,30,000. So it will be on 31st March 2009, two balance carried on 1,30,000. On viewing this account, we find that debit side total is more. So we total it and then we find it as 1,90,000. And the balance is our net profit of 80,000. See, when we use the formula method, the profit was 80,000 and here also the net profit is 80,000. Both the methods, profit is the same. In the exam, you can either use a capital account or you can use a formula method for solving the problem. Okay. With this sum, I am going to finish the part 1 of the topic accounting of incomplete records. So you can watch part 2 of this by clicking on this video here or by clicking the link in the description box. Do like our video and share it with your friends if you find it helpful. Subscribe to our channel, which will encourage us to make more videos like this one. If you would like to inquire about the accountancy classes which I take or to get more worksheets for problems with solutions, contact us at account.wiseacademy@gmail.com. Thank you for watching.